Well, Vonnie, the thing is that Dunkin actually beat when it comes to the headline numbers. Yes, earnings were down 43% on a year-on-year basis, but they still came in just a tick above estimates, as did the top line. And U.S. comparable same-store sales for Dunkin' Donuts also fell less than expected. Granted, they were down 18.7%, but not quite as bad as feared. And I would point out that the ticket sizes are larger, so that's helping offset the fact that sales are down, a similar phenomenon to what we saw with Starbucks earlier this week. I would note that international comp store sales did come up short. They fell about 35%. The street was only expecting a 27% decline, so that is a negative from the report. The good news is that sequentially things are getting better. Every single month in the second quarter, comp sales improved. They are also improving in July, but I would caution, Dunkin' said they remain down in the low single digits for both Dunkin' Donuts and Baskin-Robbins U.S. stores as of last week. That's where we see a bit of a difference between Dunkin' and the likes of McDonald's or Starbucks, which both told us earlier this week that same-store sales have actually turned slightly positive this month. And one final highlight here, Vonnie, is the fact that the company is closing 800 stores in the U.S. permanently this year. The company says this is part of a real estate portfolio rationalization. That's going to equate to about 8% of its restaurants in the U.S., but these are lower sales volumes locations, only making up about 2% of system-wide sales in the last year in 2019. So that's the story on those store closures. And overall, Dunkin' is down on this news today. It's down about 3.5% as we speak right now, Vonnie.